Hey everybody, welcome to another video, and today we're going to be taking a look at EVgo's latest quarterly report that they just put out yesterday, November 2nd. So here's kind of the main bullet points of this whole thing. Revenue reached $10.5 million in quarter 3, representing a 70% year-over-year increase. Network throughput reached 12.1 gigawatt hours, a 51% increase. And they ended the third quarter with 2,625 stalls in operation or under construction. 188 new stalls were part of that. They added approximately 54,000 new customer accounts, reaching approximately 498,000 overall at the end of the quarter. And they launched Auto Charge Plus nationwide, allowing drivers with compatible EVs, including many Teslas, to seamlessly initiate a charging session simply by plugging in their vehicle to an EVgo fast charger. And then they also entered into new site host agreements with several national brands, including Lowe's. Now, the rest of this earnings release here is pretty much expanding on those bullet points that we just went over. You can read through all of this if you want. It's on their Investors Relations page, which I will be linking down below in the description. But there are a few other pieces of information in here that are also pretty much in their earnings presentation. So here's this slide here, which kind of has all of these key statistics with where EVgo is at right now. We've got their OEM partners, total customer accounts, total stalls, total throughput growth. All of these kind of main statistics that EVgo has at this point. Then over here we kind of have EVgo's major quarterly numbers here. So some of these are things we already kind of went over in this earnings release, but 2,625 stalls in operation or under construction, 188 new stalls, 12.1 gigawatt hours of throughput, up 51%, 70% increase in revenue year over year, 4,534 of active E&C stall development pipeline, which has reached its largest point ever. This was significantly driven by the new partnership with Pilot and Flying J. So a lot of stations added to this pipeline number there. And I think there's a lot of people who don't know this, but EVgo had acquired PlugShare last year, and as of the end of quarter 3, there was 2.8 million registered PlugShare users. And then over here, we kind of have some visualization here of those stalls in operation or under construction, that 47% increase year over year. So we've got these bar graphs here. And then also another one for that network throughput in gigawatt hours. So a year ago this was at 8 gigawatt hours, and today it's at 12.1 gigawatt hours. Then this slide down here kind of goes over EVgo's major product categories aside from just charging, essentially. So they've got kind of Auto Charge Plus, which that's kind of part of the charging itself, but this is pretty much a simpler method of charging your vehicle, very similar to using Tesla's superchargers, where you just basically you would register for this, and once you're registered, all you have to do is plug in your vehicle and it'll automatically bill you, essentially, very similar to using Tesla's superchargers. Then of course there is PlugShare with their 2.8 million registered users as of the end of quarter 3. They also recorded 1.6 million check-ins up until now this year, which is a 75% increase over the first 3 quarters of last year. Then there's EVgo Optima, which is a cloud-based software platform that helps fleets ensure their vehicles are being optimally fueled at low cost. And then there is EVgo Inside, which OEMs use basically to integrate EVgo into their own apps, into those OEM branded apps. And this allows drivers to basically, find EVgo chargers, real-time availability, and start charges within those OEM branded apps. And then finally here, there's the EVgo Innovation Lab, which has been operating since last year. And basically with this, they conduct interoperability testing across hardware, firmware, and the software ecosystem for EVs. Then on this slide, we've got a few more graphs. This one showing off the active E&C stall development pipeline. 82% growth, but a lot of that was those additional pilot and flying J stalls that they've been adding into that pipeline. So I think that is kind of why we're seeing such high growth for that. There are a lot of chargers included in that partnership. And then the customer accounts, this is some pretty steady growth here. Recently here in quarter 3 they added 54,000 new accounts, so that's kind of the increase from 444,000 up to almost 500,000. Then over here, revenue up 70% year over year. Previously 1 year ago at 6.2 million, now at 10.5 million. Down here we've got EVgo's plans for their older chargers. They say they've updated 125 stalls year to date, and they're working with site hosts to evaluate replacement or removal of additional stalls next year. They say they're focused mostly on their first generation 50 kilowatt chargers, which of course are kind of less reliable at this point and are also slower in comparison to a lot of the newer chargers. So they can either upgrade existing sites with higher power chargers, expand sites, or retire these older chargers altogether. Then we've got EVgo's full year 2022 guidance. At this point, they are still guiding for revenue to come in between $48 and $55 million. I don't really know if they're going to be able to hit that. That sounds kind of unrealistic because so far up to this point this year, they've had a bit over $27 million of revenue so far. And in order to hit this minimum of $48 million for the full year, they're going to need to have like $20 million of revenue in quarter 4, which is pretty much like double where they were here in quarter 3. So unless they're going to have 100% growth quarter over quarter, I don't think they're going to be hitting this revenue guidance number here. But these other numbers, we've got network throughput of 42 to 45 gigawatt hours for the full year. Pretty much all these other numbers have been decreased from where they were previously guiding as of quarter 2. So you can see here that revenue number, it's the same. They're still guiding for that same number that they previously were. That network throughput, previously they were guiding for between 50 and 60 gigawatt hours. Now their expectations are lower, now only 42 to 45 gigawatt hours for the year. And then adjusted EBITDA is not much different from where they were previously guiding in quarter 2, which was a $75 to $85 million loss. And now this is an $80 to $85 million loss. So just kind of getting a bit more specific here. And then total stalls in operation or under construction by the end of the year. Current guidance is for between 2,800 and 3,100 stalls, which is also lower than where it was in quarter 2, where they were guiding for between 3,000 and 3,300 stalls. Then moving on to EVgo's income statement, we can see revenue of $10.5 million and a cost of sales of $13.7 million. That revenue, as previously mentioned, is up 70% year over year, but that cost of sales actually is up 75% year over year. So obviously not exactly the situation you want to be in, where those sales are growing faster than the revenue, but that's where it's at right now. And this brought EVgo down to a gross loss of $3.2 million. And then moving on to the general and administrative expenses, those came in at $32.3 million, and then there was depreciation, amortization, and accretion at $4.5 million, which brought their total operating expenses up to $36.8 million. And then when subtracting those operating expenses from their gross loss, EVgo had a total operating loss of a bit over $40 million. Then taking a look at their balance sheet, we can see that EVgo has $300 million of cash. This, of course, is lower than where it was in the previous quarter when it was at $344 million. But this is pretty much to be expected. This cash pretty much went over to that cost of sales line on the income statement as well as the operating expenses. But also for EVgo, for any of these kinds of companies that own their charging station hardware, some of this cash is also going into investing into the charging station hardware. So you can see back here in quarter two, of course, property and equipment was at $209 million, and now that's at $264 million. So, they're continuing to expand their network, and that's going to take some cash. So that's one of the contributing factors alongside of those expenses as to why their cash is lower than it was back in quarter two. And then we can also see that their operating lease right-of-use assets are also higher than where they were in quarter two. Back then they were at a bit over $34 million, and now they're at $44.5 million. And this is pretty much going to add up over time as they continue to have more locations, more leases basically, where they're operating their chargers at. And then as for restricted cash and other assets and intangible assets and goodwill, all of these things are pretty much where they were in quarter two. Not much has changed there. And then adding it all up, EVgo had total assets of a bit over $729 million, which is about $11 million less than what they had in quarter two. And then EVgo's current liabilities are at $74.3 million, up from the $63.4 million that EVgo posted back in quarter two. And then total liabilities came in just under $140 million, which is also increased from where it was back in quarter two, giving EVgo total liabilities of $213 million here as of quarter three, which is up from last quarter's $180 million. And then another thing that I wanted to go over here, this comes from their earnings results webcast, the earnings call that they had. So here's the transcript here of the part that I found pretty interesting. It says, they say, with this in mind, after we file our third quarter 10Q, EVgo is planning to file a prospective supplement to our recently filed S3 in order to facilitate at-the-market sales of up to $200 million of our common stock. We plan to use the proceeds of this at-the-market program to opportunistically raise additional capital in order to take advantage of this robust and accelerating EV infrastructure sector. So potentially a pretty significant capital raise here for EVgo, going up to $200 million. This is an at-the-market offering, so this would be something that they would be doing gradually over time. But I mean, pretty significant there, $200 million. It's a fairly significant chunk of that market cap there, currently at a bit under $1.9 billion. But this would give EVgo quite a lot of cash here, of course. Right now they have $300 million, so another $200 million potentially could be very beneficial for EVgo. So I thought that was really interesting there. Currently, EVgo's stock is trading at $7.12 per share at a market cap just under $1.9 billion, as I just mentioned. And we can see here, this was pretty much the first trading day after these earnings, and this was kind of how it went. So interesting to see this right now. I'm not a shareholder of EVgo stock, and I don't plan on buying it. I think there's just a lot of other companies out there in the market right now that are better investments than most of these charging companies. So that's kind of my thoughts on the stock, and that's pretty much EVgo's quarter three earnings. I hope everybody enjoyed the video. I've got a lot of other videos on charging companies, including some on EVgo, so be sure to check out some of those, and I'll see all of you in the next video.